Welcome back to the channel, my people. It's your boy One, and in this video here I'm going to be going over how I managed to catch 3 trades in one session. One of these managed to pass me a phase 2 within 2 minimum trading days, and the other 2 trades managed to get my 200k nearly to passing. They got the account out of drawdown and I literally have 2% left to pass, and then yeah. And most importantly, how I managed to catch this move on my live 100k account with Breakthrough Capital. Now this account was in 3% drawdown, meaning I lost $3,000 on this account. However, with just one of these trades over here, I managed to get the account out of drawdown and now it's ready to request a payout. As you guys can see, the proof of the account is there and the certificate is right there. Nevertheless, before we get into this video, I just want to quickly say, for those of you guys that are interested in my strategy, daily markups, resources, so many sections in here which you guys can get access to, make sure you guys go check out the link in the description, and also make sure you guys use code BTC10 for 10% off all your valuations with Breakthrough Capital. This is currently the prop firm that I'm trading with. They paid me out on time before. Their spreads are 10-10, especially for traders like me that have tight stop losses. I need good spreads, and overall I strongly recommend this prop firm. So without further ado, let's get right into this video. Now, as always, I like to do a top-down analysis of all of my trades, starting from the higher time frame to the lower time frame. And overall, as you guys can see, we've taken out a previous weekly high. Now, I've taught you guys in Project 30 that once we take out these major points of liquidity, you guys can expect a reversal. Price has also mitigated this weekly imbalance and it has started to trade away. Now, because we have taken this point of liquidity, I'm expecting at least price to rebalance this range over here, mitigate all of these imbalances over here which haven't been tapped into. So naturally, all of the traders out there would be looking for sells. However, this is the importance about trading objectively. Trading objectively simply just means looking at both sides of the market, not marrying a bias, not marrying any ideas, and simply just trading from an observer's standpoint. Now, if we scale down towards the lower time frame, you guys can see we have had multiple breaker structures towards the downside. Now, when we get these breaker structures, we understand that multiple traders would be looking for sells. Why? Because we know breaker structures tells us that price wants to continue going down. However, this is the importance about trading objectively. Even though the market is giving me clear signs of being bearish, I've still managed to catch a buy and make profit. Now, the first thing I want to say is notice the beauty about trading on the lower time frame. When you're trading on the lower time frame, yes, your bias could overall be bearish. However, because you're on the lower time frame, because your stop losses are tight, you can still catch a move higher before the actual sell-off lower. Nevertheless, what have I seen going into the London session? There has been 2 equal lows printed. Now, this is a previous session low, and like I've taught you guys in the time-based liquidity video, previous session lows, previous session highs, these are good points of liquidity. And I've also noticed how there's this unmitigated order block right below these 2 equal lows. We know order blocks have to get mitigated, and I've always told you guys never ever trade on 2 equal lows in the market. Why? Because this is simply inviting in early buyers into the market. And if we zoom down to the 1 minute time frame, what can we see? The Asia low has been swept out. We've had a market structure shift towards the upside. So naturally, a lot of Judah swing traders would be looking to take buys off wherever. It doesn't really matter. And how you could avoid taking any losses, maybe if you try taking an entry off this fair value gap, simply understand there's 2 equal lows. We don't break our rules, and there's an unmitigated order block which has to get mitigated below. So what does the market do? You guys can see the market ends up selling off, tapping into this refined point of interest, sweeping previous session lows, equal lows, whatever it may be, and we're now expecting somewhat of a reaction. And actually, because of the time of this trade, it's 7 o'clock right now, so I'm not looking to get into the market just yet, simply due to the fact that I know London Open is in an hour and ideally it's too early for me. So if we play price action on, you guys can see just before London Open, what has the market done? If we scale down to the 1 minute time frame, you can see we get a market structure shift. Price retraces. Notice what it does on the retracement. You guys can see if we zoom in and redefine the details of price sweeps liquidity at the lows. We know that the market loves to take liquidity before it reverses. So this is a good indication for us. Why is this? Because once the buyers are out, the market is going to go for the sellers. Again, price gives this breaker structure towards the upside, retraces, goes up higher, gives a third breaker structure. However, I avoid taking any buys here due to my other confluences, and price ended up taking out liquidity one more time before it traded away. So now that I've seen multiple liquidity sweeps of the lows on the lower time frame, and I've seen multiple breaker structures towards the highs, I know that the market is due to buy off, especially now that it's London session. The manipulation move is over. I'm now expecting distribution towards where I need a realistic point to target in the market. And I can see here on the lower time frame, there's all of this liquidity over here. Asia highs, just all of this liquidity. So this order block over here stood out to me, so I simply waited for price to tap back into this order block. Once price gave this rejection on this candle closure, I took an entry, put my stop loss on this low over here, 2.4 pip stop loss, and I simply targeted this high over here. What has price done? Price ended up rallying up as soon as we broke this high over here, and just like that, price ended up hitting take profit. That's the first account done. This trade here managed to pass me in phase 2. This account was in like 2% drawdown, I can't really remember. And as you guys can see, proof of the account being passed, we were in a bit of drawdown. But the next day we ended up hitting the profit target needed, and as you guys can see, 2 minimum trading days. Certificate is right here. So yeah, moving on to the next trade. Now just starting off on the higher time frame on GBP/USD, you guys can see we have been really bullish and price looks like it's drawing towards this high over here. If we zoom in and redefine the details of price, we can see what has price done. Price has made liquidity, taken liquidity, mitigated this imbalance over here and traded away. Bullish fair value gaps are being respected, bearish PD arrays are getting ran through. So it's clear as day that the market is somewhat bullish. Now I've just dropped down to the 2-hour time frame and I've went all the way back over here, and I want you guys to notice something. What is there over here in price? Price has failed to mitigate this imbalance once. So not only is there an unmitigated imbalance, there's also equal highs resting in the market. We know this imbalance has to get mitigated, and we know that these equal highs have to get taken. So naturally, I'm looking for buys. Price came so close to taking out these equal highs and then possibly reversing. However, it failed to take out these equal highs, and instead it made more relatively equal highs. So we can go ahead and mark this out. Now I can see on the 4-hour time frame that this 4-hour fair value gap is being respected. So once again, this is just more confluences that price is going to go drive drive up. Very similar to Euro USD, we had these two equal lows and we had an order block over here. What does price do? Price goes ahead and taps into this order block and gives a reaction. So we've taken out two previous session lows, mitigated an order block, and now we can start dropping down to the lower time frame. And once again, notice this pattern in price. Price loves to take liquidity at the lows before it goes and expands away. Again, we have multiple breaks of structures towards the upside. However, I've avoided all of this nonsense price action over here simply due to my other confidences, but nevertheless, we've had multiple breaks of structures towards the upside. And actually, because we've taken liquidity so many times before London open and we're now breaking structure towards the upside, I'm now expecting the market to start distributing. You guys can see we have a clean form of AMD over here. The market accumulates around the opening. We manipulate lower, mitigate that point of interest which I had marked out, mitigate this imbalance over here, and now we're starting to expand away, so I'm expecting distribution higher. So I've simply just waited on London open, and what have I noticed? Price has taken out this low over here. We've mitigated this 2-minute order block over here and respected it. Like I said to you guys, notice how price has always taken liquidity before it expands away. So I've understood that on every single one of these liquidity sweeps on the lower time frame, this has caused an expansion. So once price has taken liquidity again, tapped into a good point of interest, and it has failed to close below, I understand that there's a very, very low chance that the market's going to come back down here. So what have I done? I've taken my entry again, 2.7 pip stop loss, and I've simply gone ahead and targeted Asia high. Now, I'll be honest, due to spreads, whatever, I did get a slightly worse entry, but the risk reward was still around the 1 to 7. Now, even with this high risk reward, I didn't go in too many lots. I only went in 20 lots, so I didn't even have my full risk on this setup. And if I'm being honest, that wasn't really part of the plan. I would have went in 1% risk and bagged the nice payout, but because it was a manual entry, I didn't really have time to calculate it. But even then, alhamdulillah, I'm not complaining. Now, notice what price has done as soon as it's tapped my entry. You guys can see we have started to accumulate. Now, how did I still have the conviction to hold this trade? Very simple. Now, think of this from a psychological standpoint. You're in 3% drawdown on your account. This is supposed to be that A quality setup that's meant to take you out of drawdown and essentially get you a nice payout. And as soon as you enter the market, you've been faced with what, 10-20 minutes of straight consolidation, straight poor quality price action. How did I still have the conviction to hold this setup? How didn't I let any psychological issues hit me? And that's simply due to the fact that I accepted the risk. When you see your entry model format and it's an A quality setup, you guys should not marry the idea that this has to be the trade that goes and hits TP. Any real trader would know that you can have an A quality setup. It's all a game of probabilities. Today could be the day that you lose money. The next day could be the day that you make money. As long as you're following the same set of rules, same plan, that's all that really matters. So I've simply played my cards right. I've accepted the risk. And another thing I want to say is when I got into drawdown on this account, I was following my rules. I didn't get into drawdown by over trading, revenge trading, taking bad quality setups. All of the setups that I've taken to get into drawdown were good quality setups. They were part of the plan. These losses were accounted within my strategy. So I understood that it's only a certain amount of trades I can continue taking until eventually one of these trades go and hit. And what's price done? Price came back to my entry one more time and we started to displace away. As soon as we broke in this high, I've went stop loss break even, and you guys can see price ended up retracing, nearly hitting break even, but then it went near towards TP. Notice one more thing. Imagine being in this trade, literally about to go and hit TP. Also, I forgot to say one more thing. Take profit. I simply just target Asia highs because there was equal highs over here. Now, this is another thing I want to say. You need to know when to hold a trade. When you lose conviction in a setup, where you're very confident in, you pay yourself like that. You need to know how not to be greedy, but still have a realistic take profit system. Yes, I could have easily swung this trade over to that external high, which I had marked out on the higher time frame for a nice 1 to 15 risk reward ratio, and I could have got a nice payout as well. However, although that's my higher time frame drawn liquidity, I'm not too confident that price can go there. And there was also CPI this day, so I didn't really want to hold it through. And look, I'll be honest, securing that payout was a bit more important for me. And notice what price does. Price comes back up, ends up selling right back down to my entry. Now, someone could have easily got scared here and they could have tried reanalyzing all of this and saying, yeah, liquidity sweep, market short shift towards the lows, it's retracing, it's failing to go higher, let me cash out of the trade. Or they might have got too greedy and held onto the trade, and then when it came all the way back down here, they've seen this break of structure and now they're cashing out of the trade. All these psychological issues, like I said to you guys need to stay essentially patient in the market, follow your strategy. Wallahi, like if you have a good strategy and you actually know what you're doing in these markets, no matter what happens on the charts, you don't care, you follow what your strategy tells you to do. And it took me a solid year to figure out my strategy, and that's why I created Project 30. If you guys want more details on that, like I said, go check out the link in the description. And even if you're not trying to join, that's completely fine. I've released half of the playlist already completely for free, teaching the basics. You guys can go ahead and watch them, test them concepts out for yourself, see how accurate they are actually on the charts. And once you guys have seen the basic concepts, which essentially I'm going over in this video, and you guys want the real deal, the real source, the actual entry model, the actual strategy, make sure you guys go check out Project 30. Nevertheless, I've noticed that price has tapped into this order block. It has swept liquidity one more time towards the lows. I've simply waited for more structure, and as soon as price has taken out this low over here, I've taken a manual entry on this candle over here, put my stop loss on this low, 2.6 stop loss. All of these stop losses were tight. We like it tight. And I've gone ahead and targeted Asia high. And as you guys can see, this setup ended up rallying towards the upside. I set my stop loss to break even as soon as we broke this high over here. And you guys can see TP hit on both of these trades. And even if you zoom out, you can see price did end up going and hitting essentially my external drawn liquidity. However, I was still happy. I wasn't greedy. After these 3 trades, I hopped off for the day. I didn't trade for the rest of the day. Why? Because I understood that I've caught 3 moves back to back, all averaging 1 to 6 risk reward ratios. This was an amazing day for me. Now, I don't want you guys to look at this and come into the markets with the expectation that every single day you're going to have to come and catch 3 moves in one session. If I'm being completely honest, it's the first time I've ever done anything like this, catching 3 moves back to back in one session. So I understood that after me catching these 3 trades back to back, my psychology was naturally gonna be a bit more, what's the word? I'd be in a state of euphoria. Now when you're trading in a state of euphoria and you get overconfident in the markets, you end up doing silly things. You end up thinking that you're now the market makers, and now all of a sudden you're blowing accounts, losing all the profit you made. And I say this to my students all the time: capital preservation is a lot more important than capital inflation. So preserve your capital. You came into the markets, you caught 2-3% during London session. Preserve that capital. Don't go into New York session and blow it all just because you think that you're the market makers. Now you guys feel free to join the free Discord server. We're currently at 2,400 members. This is completely for free. There's a lot of free channels in here which you guys can all benefit from. Of course, the Project 30 section is exclusive towards my students only. However, there are still multiple sections which you guys can all benefit from. Not forgetting to mention that we've given away so many accounts in here, it's actually ridiculous. Now, one more key thing I want to underline: drawdown are where traders are made. When you're in drawdown on your account, you have to remember to follow your strategy. I can't emphasize this enough. So many of you guys, you're in drawdown on your accounts, and all of a sudden you start diverting from the plan. You start thinking that just because you're in drawdown, your strategy doesn't work anymore. You guys, you base your success based off of your P&L. You don't base your success based off of the good things that you've done, the good habits you've actually practiced, the habit to actually follow your strategy. Base your success off of that, not for how your day ends, and watch how far you guys get. And there's a saying in trading which I say to my students all the time: just because you make money doesn't mean you've done anything good, and just because you've lost money doesn't mean you've done anything wrong. Now alhamdulillah, this day of course I've done something good, not just because I made money, but because I actually follow my strategy really well. But like I said to you guys, the second you make that mental shift and you start focusing on becoming the best version of you that's out there and actually becoming an elite trader, that better person of you is what makes you the money. You guys think it's the trade that makes you the money. No, it's the better version of you that goes ahead and makes you that money. So with that being said, that's enough of me yapping. Make sure you guys go ahead and join this free Discord server, link in bio. And if you guys are trying to learn how to get into trading, make sure you guys go ahead and check out the Project 30 videos. All of the links are over here and they'll be somewhere here on this video. This is where you guys can find the 14 episodes completely for free. And like I said, if you guys want access to these ebooks, the strategy, multiple weekly calls, live access to all of the content, Q&A sessions, psychology lessons, so many resources that you guys can use, make sure you guys go check out the link in the description. With that being said, it's been your boy NFX. I hope you guys have learned something from this video. Hope you guys have enjoyed. If you guys have enjoyed and got this far, just comment the word scarf. I'm just curious to see how many of you guys have actually got this far in the video. With that being said, it's been your boy NFX. Take care, my people.